Hello, I'm Noelle Lim on ASEAN Speaks by Maybank IBG. 2022 opened with a surge in COVID-19 cases, and over the weekend, there were news reports about a strain of the coronavirus called Delta Cron that combines the Delta and Omicron variants. In this podcast, as always on Mondays, we bring you a roundup of Maybank's best insights to prepare you for the week. Suhaimi Ilias, our Group Chief Economist, moderates the discussion with the research teams on what investors need to focus on, what might continue or change from 2021, and some actionable ideas across key markets of ASEAN.
2022, generally equity market gave back gains in the early part of last week to end the week lower. This is amid increases in bond yields. So for example, and in particular, the yield on 10-year US Treasury note touched 1.8%, the highest level since the start of the pandemic. This follows last Wednesday's release of minutes of FOMC meeting in December, showing US Fed's policymakers are contemplating quantitative tightening or QT, as in reducing balance sheet size after the completion of QE taper that slows the expansion of US Fed's balance sheet. US interest rate hike is also expected to start as soon as March this year, especially as US unemployment rate fell to 3.9%, lower than the 4.2% expected and near levels that were last seen just before the pandemic. All this underscore risk of Fed getting more aggressive on monetary policy normalization. Currently, we are expecting 75 basis points per annum hikes in Fed fund rates in 2022 and 2023. Meanwhile, the Omicron variant of COVID-19 virus caused new lockdowns in Hong Kong, including a 2-week ban on incoming flights from 8 countries, including US and UK. This is as US and Europe set new records. In France, daily cases soared above 330,000, prompting hospitals to brace for a crisis. In Italy, I think they ruled that all university staff and people above age 50 must be vaccinated. Spain makes mask wearing mandatory again, and the army was deployed to help increase vaccination. However, most countries stopped short of imposing lockdowns. In the UK, Prime Minister Boris Johnson said the country could ride out the Omicron-driven wave of infections without further restrictions. I think a key observation from current Omicron wave is that hospitalization, though rising, were apparently decoupling from infections, and the number of deaths remain somewhat contained. Infection aside, inflation remains an issue in major advanced economies. For example, in Eurozone, inflation accelerated to a record level of 5% in December, driven by surge in energy and food costs. But it was a mixed picture in ASEAN, as per last week's release of CPI data for the month of November-December. We have picked up in Indonesia, but moderation in Thailand and Philippines. Over in China, the cash-strapped property developers, which are grappling with liquidity squeeze due to housing slump and high debt levels, continue to make headlines. China Evergrande, the world's most indebted developers with over $300 billion in borrowing, said it would seek approval for a payment delay on one of its yuan-denominated bonds after meeting with creditors over the weekend. Shimao Property failed to pay off part of the local loan after its creditor demanded early repayment, causing sell-off in its bonds and shares. Guangzhou RNF Properties said it did not have enough funds to buy back a $725 million bond as the developer's asset sales failed to come through as planned. And Kaiser Group is under pressure from local authorities to repay investors of its wealth management products. And at the same time, I think China's policy of zero COVID-19 tolerance continued with extended lockdown in the city of Xi'an and reimposition of travel restrictions in Shenzhen after 2 infections were detected. For the first session of this year, we have Hak Bin on ASEAN macro, Maria and Thanh on Thai and Vietnam equity market outlook and strategy. Kaushal will share his thoughts on ASEAN energy sector post COP26, And we also have TJ, Ting and Chee to run through Malaysia's oil and gas and 5G as well as regional plantation. Starting off with Harbin. Harbin, can you run through the key highlights from Singapore's flash estimate of fourth quarter 2021 GDP? And as a result of that, are there any changes to Singapore's economic and policy outlook and lookout for this year?
Hey, morning, Suhaimi. So Singapore's fourth quarter GDP surprised slightly on upside. The economy continued to recover, driven by a resilient manufacturing sector and improving services. So GDP expanded 5.9% in the fourth quarter, and for the full year, that means GDP actually expanded by 7.2%. That's slightly ahead of the government's estimate of around 7%. Just bear in mind that for the full year, manufacturing is the one that's been the big driver. It's well above pre-pandemic levels, about 25%. Services is right at the pre-pandemic levels, whereas construction is still well below. The final GDP numbers will actually come out in mid-February, and we're looking for a further upgrade. The government tends to be a bit more conservative in the flash. In particular, we note that some of the October-November re-export trade numbers are pretty strong. Retail sales are also picking up. People movements to retail and recreation have improved in December as well. Now it's roughly about 5% below pre-pandemic levels. And I think with the rollout of the booster shots, Singapore is well ahead of the other ASEAN countries. About 42% have received their booster shots. I think there will be some upside risk to the final last year's GDP growth forecast. For this year, we're looking at 3.8%, slightly below the midpoint of the government's 3 to 5%. Again, I think the engines of growth will switch around. More manufacturing is at a much higher base, and there's parts that are running at full capacity, but services and construction should start catching up. One key highlight I want to highlight for Singapore's forecast is actually the interest rate forecast. We are now expecting the Fed to hike 3 times this year and another 3 times next year, in line with, I think, with the new dot plots. So for Singapore 3-month, it is the most sensitive to the Fed forecast. So we're looking for 3-month SIBOR to rise to 0.98% essentially by the end of this year, and to 1.52% by the end of next year. So that's a fairly sharp 55 basis point increase for this year. MAS will meet again in April with inflation, I think, on the uptrend. And I think PM has already come out to say that the GST hike is most likely, the budget will come up in mid-February. I think inflation pressures will remain pretty intense. So we're looking for the MAS to hike, to tighten again in April. And at this point, do not rule out a more aggressive hike, meaning a double move, essentially possibly a recentering and a steeper slope as well.
Speaking of interest rates, central bank's monetary policy, I think on Indonesia, House view is for Bank Indonesia to raise interest rates by 75 basis points this year, the most aggressive forecast among the in-house ASEAN's benchmark interest rate hikes for 2022, because for the likes of Malaysia, Philippines, Thailand, I think we are pricing looking at 25 basis point hike only this year in later part of 2022. So why is Indonesia central bank's interest rate policy outlooks different than the rest of ASEAN?
So for Indonesia, we decided to take a more hawkish stance, even though inflation was fairly well behaved last year. Bear in mind that in terms of recovery, Indonesia is second after Vietnam, so it's actually well above pre-pandemic levels. And the recession, or want to call it recession, it wasn't very deep. It was pretty shallow. For the December figures, you already see the inflation rising up. It was up 0.6% month on month. On a headline basis, it was up 1.9%, and core is also inching up. So I think it's probably going to surprise on the upside. I think a lot of the prices in Indonesia are also, controlled administratively. In particular, we're mindful that the retail fuel prices currently is 30% below global market prices, and we won't be surprised if there's some kind of adjustment in that subsidy component this year. Just bear in mind that the VAT hike is also going to materialize in April. The VAT will be hiked from 10% to 11%. And also electricity subsidies will be narrowed in the second half of the year to only the lowest 40%. So that's some of that's going to go away, and prices will rise on a energy related component. And I think Third is really with the Fed tightening. Just historically, the rupiah is the most sensitive to dollar movements and the Fed rate hikes. And I think with the Fed really set to be a more aggressive, we're mindful that Bank Indonesia may have to tighten, accordingly as well to maintain the stability of the rupiah. So those are some of the factors that we think will actually prompt a BI to probably hike 3 times this year.
Right. Thanks, Adlin. Let's switch gear and move to equity market outlook for this year, specifically on Thailand and Vietnam. But ladies first, Maria, on Thai equity market outlook, is this year going to be a better, weaker, or more of the same versus 2021? And for investors, what are the major theme sectors and stocks to put their money in?
Yes, good morning, everyone, and Happy New Year. In 2021, the SED rose 14.4% year-on-year. It was the second best performing ASEAN in local currency terms. Corporate earnings growth was expected to land at 39%. As of 9 months, the market earnings already 79% of our full year forecast. And this 39% is a rebound from the 33% contraction in 2020. In 2022, earnings growth is forecast at 17%, and this can support the market. So to answer, equity market would be slightly better in 2021. As for where to put the money, 2 developments that were very strong in 2021 was M&A that led to share price speculation and very high capital gains, especially in telco sectors and also in the asset management companies. The second is the IPO market. We had 23 listings on the SET and 18 in the MAI. At the IPO, this was valued at 454 billion baht. And by the end of the year, the average gain was 38%. So M&A and IPO is still going to be present in 2022. In addition to that, we have 3 themes that we are watching very closely. One is electric vehicle, the other is renewable energy, and then logistics. The EV is moving forward in Thailand, but the action has been more on the commercial applications like buses, big trucks, delivery vans, and motorcycles. We are waiting for the final policy on the subsidy on EV to bring the price in parity with ICE auto, so that migration in the passenger car segment can begin. Direct EV play is Energy Absolute, that is EATB, and the indirect ones are Siam Cement and PTT, as well as the auto parts makers SAT and AH. Renewable is also something that could become interesting if the 2018 Power Development Plan amendment is completed and released. In here, we see the potential increase of renewable capacity by 52%. So renewable play are GPSC, BGRIM, and TPIPP. These are under our coverage. Those that we do not cover are WHAUP and ACE. Logistics is another area that could be quite interesting. And this is really anchored on the China-Laos high-speed railway and the change in the trade landscape brought about by RCEP that went live in January 1st. Our top pick here is WISE, as it is ahead of competition, especially in the multimodal cargo services. And the other logistic plays that could be interesting are Sonic and Carry Express.
Maria, let's move on to Vietnam equity. Thanh, after almost 40% gain last year, I guess the questions are similar to what's posed to Maria earlier. I mean, basically, is Vietnam stock market is set for another bumper year this year? And what are the sort of major theme sectors and stocks for investors to, put their money on in 2022?
Yeah, thank you. And well, yes, we have a very strong year last year for Vietnam, like you say, 36% upside, and it was driven by very steady corporate earnings growth of like 33% and booming liquidity. Vietnam's market liquidity, increased from like $300 million per day to $1.5 billion today, which is the main drivers. So entering into 2022, we generally remain a bullish view on the market. We think that the market still have chance to level up to around like 1,800 points, which means about another 18% upside from the today's level. And it's continued. The two driver is steady EPS growth of 28%, which is still among the best in the region. And we expect the market liquidity can still be maintained on average around $1 billion per day. The government of Vietnam has made timely response to control the COVID, and we fully shifted from the zero COVID to live with COVID strategy. And the vaccination has been accelerated very fast, and by now Vietnam has from the bottom to be among the top in the region in terms of vaccination coverage. And with this background, we expect that Vietnam would return to high growth trajectory in terms of GDP, like around 6.7 or 7% this year. And the government also launched the stimulus package to support the recovery. And we see that with this sizable stimulus package, which focus on the infrastructure investment, and which also help to Vietnam to continue to attract FDI into the country, and it would generally translate into better consumption and also for banking service. So these are the themes that we think could see that the investors should focus on, and will still like the big sectors and key sector in Vietnam, like banks, retail, and energy for 2022.
Thanks, Thanh. Let's move on to ASEAN energy sector. I think our regional energy team issued a note over the weekend. So, Kaushal, I basically have three questions for you. First is, how has ASEAN energy sector performed post COP26? Question two, are there key policy lookouts to expect across ASEAN this year? And third, what are the actionable investment ideas for ASEAN energy sector? What do you, Kaushal?
Yeah, hi, good morning, Suhaimi. So post COP26, the divergence in performance of the energy assets has been very clear. Coal miners have significantly outperformed, followed by oil and gas producers, and lastly, renewables. Just to give you some numbers, the performance for November to December 2021, Australian coal miners on average rose 7%, while oil and gas producers globally ranged between 1% to -4%, while renewables globally fell between -5% to -26%. The -26% was US renewables, which was a bit of an outlier. For ASEAN specifically, oil and gas producers rose around 1%, while renewables were down by 8%. So quite a similar trend to the global view. In 2022, I think it's going to be a year to watch out for. Countries have agreed to revisit their NDC targets and come up with more ambitious targets for COP27, which will take place later in November this year. And furthermore, they're also required to provide a detailed roadmap on how they will hit targets. So within the region, both Thailand and Vietnam have their draft power development plan submitted for approval. Documents will be finalized by end of 2022 or early 2023. The plans are greener in nature. Indonesia has also released its latest power plan in 2021, but we will see carbon taxes on coal-fired plants roll out in 2022, and we could see potential easing of fossil fuel subsidies, which was promised in COP26. For Philippines, Philippines will be tendering around 2 gigawatts of solar projects for 2022. We could also see a positive policy shift from Philippines as power stability in terms of coal-led outages have been a big concern in the last 2 years. And lastly, Malaysia is another country that is, it's the only country in the region that has raised its NDC targets. The solar auctions have been very successful in terms of interest by lenders and investors with competitive tariffs. So we could see potentially more of these. Now, in terms of the actionable investment ideas, we have a couple. So we continue to believe that despite the disappointment on COP26, the energy transition trend is clear. Governments will look to close the emission gaps. Policy will get more supportive, and increasing amounts of capital will flow into the space. So companies that can add value to this future carbon neutral economy will benefit, whether it's in the form of renewables, energy management, trading services, EV ecosystem, etc. So from our universe, we like BCPG and GPSC from Thailand. BCPG has a 100% renewable portfolio, while GPSC has a strong positioning in both renewables and EV ecosystem. From Malaysia, we like SciPark and SolarVest, which will see a strong pickup in renewable capacity. From Philippines, we like Aboitiz Power and AC Energy. Both are very well positioned to capture renewable growth in the country. In terms of the fossil fuels, we believe that gas will remain the transition fuel of choice, and it has a decent runway of growth. So we suggest avoiding coal and oil heavy companies, but we prefer gas-based. So this includes PTTEP and PTT from Thailand, Petronas Gas from Malaysia, and Petro Vietnam Power from Vietnam.
Right. Thanks, Kaushal. Let's move on to Malaysia oil and gas, still within this sort of energy space. TJ, I think Petronas releases its activity outlook for 2022 and 2024. So I guess almost natural question to ask is what's the key highlights from the activity outlook for the next 3 years, and how does it compare with PAO for 2021 and 2023?
So, morning. For Petronas Activity Outlook, this is its 5th edition. What we are seeing from this latest edition is that they have a 3 years outlook for 2022 to 2024. For this year itself, what we are seeing is that they are basically being cautiously optimistic. In terms of activity, for this year, it will be very similar to last year, based on numbers of activities and types of activities. But in terms of subsector highlights, I think the drilling space will basically continue to do well. OSV will see greater activities. Fabrication will be flat year on year. But I think for the next 2 years itself, I think Petronas is more optimistic in terms of what they plan to do, especially for 2024 itself, whereby there'll be a sharp increase in terms of activities overall for this space. So all in all, I think the likes of Valesto, Icon Offshore, and Wasion per se will basically benefit these activities outlook for Malaysia's domestic operations.
Can you run through us again what's sort of Petronas Capex plan over the next few years in total, the value of Capex?
Okay, in terms of Petronas Capex plans, what they are planning is basically to spend about 40 to 45 billion per year on average for the next 5 years. And basically this will encompass all the various activities going forward. But what we are seeing here is that there'll be greater emphasis for green energy investments, whereby they have earmarked 9% of their Capex for these activities, which is, if you were to compare that against the peers in the market, I think Petronas is basically in the mean valuation, in the sense that they are not going to be the forefront in terms of spending much of their Capex on renewables, but neither would they be at the back in terms of spending on that segment itself.
Right, thanks, TJ. Still on sort of a commodity space, so to speak. Ting, can update us on the plantation sector developments in the quarter that just ended?
Morning, Suhaimi. So in fourth quarter, CPO price has averaged higher to a record high, 5,171 ringgit per ton. This was 53% higher than a year ago, and even quarter on quarter, it was 17% higher. The recent high prices are in part supported by a fear of supply disruption. And this is due to sporadic flooding across Malaysia since December. And we understand yield losses have been manageable so far, compensated by higher CPO price. However, the sector is still not out of the woods, as the current rainy season is forecasted to last till March of this year for some states. Any subsequent wave of floods or any prolonged flood could severely damage the infrastructure and further disrupt operations. Nonetheless, we do think that due to the high prices in fourth quarter, growers' earnings prospect would be good in the fourth quarter. The higher price should more than compensate for weakness in quarter-on-quarter output. And the heavy rainfall in fourth quarter also meant that costs will be contained as fertilizer activities are curtailed.
Ting, weather aside, are there any updates on the foreign worker situation in the sector?
Yeah, so based on our channel checks, the foreign workers are still not back in the country, even though the government has given its approval in principle sometime in October last year. We understand the government now is working on a G2G level to expedite the situation. So hopefully we should see more workers coming back by the end of this quarter or early part of second quarter.
So you are staying positive on the sector despite lower ASP this year and the fact that last year we saw the divergence between CPO price and sector share price performance. So the question is why? And on that note, which plantation counters do you think will do well in 2022?
I think 2022 can still spring surprises, even though we do acknowledge that 2021's record high CPO price of about 4,400 ringgit per ton may not be repeated in 2022. In fact, the market has never deemed the present high prices of above 5,000 ringgit per ton to be sustainable. Now, in general, the sector suffered from a lack of interest last year on several factors. One is a number of companies or planters did not fully benefit from the high CPO prices in the first 9 months due to earlier forward sales lock-in and lower prices. And then there was also Indonesia's high export taxes on growers in first half of last year, as the net CPO price was capped at 3,000 ringgit per ton compared to 4,000 ringgit per ton of spot pricing in Malaysia. And there's also earlier political uncertainties in Malaysia, with state of emergency declared between January and August last year, and subsequently the one-off Cukai Makmur and foreign source income announced during budget 2022, which weighed down on broader market sentiment and finally ESG consideration. I think some of these events that happened in 2021 will not repeat in 2022. For a start, forward sales into 2022 appear to be much lesser, meaning companies are going to be able to enjoy higher spot pricing. While the market, including our house, is worried about global supply recovery this year, and hence the stockpile turning ample in 2022 from a tight situation last year, there is still much uncertainty in these theses. The supply risk will be driven by three immediate factors: weather, fertilizer supply, and also labor. Now, La Nina has been confirmed. As we all know, flood is in Malaysia last month. But over in South America, industry experts are now looking to cut the oilseeds outlook as we speak due to a drought situation there. And global fertilizer supplies remains disrupted following the export restrictions imposed by Russia and China and US sanctions on Belarus. So planters are likely to have to miss their 2021's fertilizing target, while unsure if they are able to secure sufficient fertilizers for 2022. And fertilizer prices have more than doubled or even tripled recently. And this may cause some planters to cut back, especially smallholders, to cut back or defer their fertilizer application in 2022. Likewise, we still worried about Omicron, whether the countries will tighten borders again, and again, possibly delaying the arrival of the much needed 32,000 foreign workers into Malaysia without the much needed workforce, palm oil yield in Malaysia may again be below potential in 2022. As for stock picks, we prefer small to mid caps as they are attractively priced. Merger and acquisitions activities will remain robust for 2022, and our preferred buys are Sarawak oil palms and Bauxite plantations, and for large cap, Kuala Lumpur Kepong.
Thanks, Ting. Chee, regulatory uncertainty is back for Malaysia's utility sector, specifically power and telcos. Can highlight what are the developments and what should investors do in light of these developments?
Sure, Suhaimi. So a couple of notable events recently. Firstly, you have the communications minister announcing that the cabinet is reviewing the 5G rollout model. That's essentially a potential flip-flop. Recall Malaysia had in early 2021 decided on a single government-owned 5G network. The second event was essentially the regulator announcing that electricity tariffs will be maintained into 2022 until further notice, after the government had decided to delay both the new base tariff as well as the pass-through surcharge. So this essentially places the stability of the Naga's earnings at risk. Now, given this elevated uncertainty, I think stocks in both utilities and telecom sectors are unlikely to outperform. So avoid or be selective, perhaps focusing on stocks with superior standalone fundamentals like TM.
Thanks, Chee. I mean, just very briefly, can you share with us again the existing Malaysia's 5G Capex target and rollout plans? And is the review of the 5G model like a storm in a teacup or a real spanner being thrown into the wheels?
Sure. DNB had estimated the total rollout cost at about 16.5 billion ringgit over a 10-year period, of which network-related stuff amounts to about 12.5 billion ringgit. In terms of rollout targets, by end 2021, we have had some coverage in KL, Putrajaya, and Cyberjaya. By end 2022, coverage should be expanded to major state capitals. On the review as well as the model, now this model of a single government-owned network is a big deal to the mobile telcos. So if you imagine in 10 years' time, when 4G becomes obsolete, mobile telcos would become mere retailers. So telcos indirectly are, losing value to DNB, which is why mobile telcos are still fighting up to today. In terms of endgame, one would think that the government would maintain this DNB-led model, since DNB had already hired staff as well as had signed all the equipment contracts. But we'll see what transpires officially when the government makes its announcement.
So that's a wrap for this week. Have a good, safe, and productive weekend, for that matter, 2022. Bye all.
That was Suhaimi Ilias, Group Chief Economist with the research teams. For specific advice on information that was discussed, speak to your trading rep and check out market insights on the Maybank Trade app or contact our sales desk. I'm Noelle Lim on ASEAN Speaks by Maybank IBG.